Hello, welcome to my channel, good people. Today I will talk about the PE ratio. I mean the golden ratio for all intelligent investors. Besides, this metric is also very handy for those who do not have the time to do a thorough evaluation, say fundamental about a particular company. The PE ratio is a basic investment tool that can be used to scan, evaluate, and pick stock ASAP. I mean, buy stocks as soon as possible. Okay, now, before I soldier on, this video is for financial education purposes. Thank you. So, grab some water, popcorn, and then subscribe. Well, for more detailed analysis on how to pick and evaluate a company stock, go and watch my video titled How to Evaluate and Pick Stocks. You will see the clip at the end of this video. Again, more good news. You will see a link to the PDF file I put together titled A Step-by-Step Guide on How to Pick Value Stocks. You will see it at the description and comment section below. Click the link to download the PDF file. Okay, back to PE ratio. Why is this important? Well, the PE ratio quickly summarizes company fundamentals vis-a-vis price of a stock concerning earnings of the company. I know you are wondering and want to know how and in what way could this be possible. Well, please stay with me. Okay, now, as an intelligent investor, PE will help you determine if the share price of a particular stock accurately represents the projected earnings per share. I mean, you will get a clear picture of how much this stock is worth. Why? Because you should not buy the stock of a company when it is overvalued. Meanwhile, I like to emphasize this key point. When you buy the shares or a stock, you are directly buying a business. So, what do I mean? Well, you should be able to get a good understanding of the business embedded in the stock or behind the stock if you like. In effect, if it is a good business, if the business appreciates, the stock will also multiply in value. While with a lousy business, you will lose your hard-earned money. Okay, I know you want to know how you can use PE to scan and pick stocks ASAP. Okay, let us consider two companies as our case studies, and let us use the PE ratio as a metric to compare the valuation of these two companies. Okay, let us go to Yahoo Finance and have a look at the two companies' PE ratio. However, let me say this, there are several other websites you could go to check for the same information, like finvix.com. Okay, let's say you don't have much time to do a comprehensive analysis, like I mentioned, of these two REITs. One of them is National Retail Properties, ticker symbol NNN, and the other one is AGNC Investment Corporation, for example. Now, let us go to Yahoo Finance and check for some basic information. We're going to check Finzi later, okay? Let's go. Now, okay, let me show you how you can calculate the PE ratio, for instance. What you need to do is to take the current stock price, divide it by the most recorded earnings per share. Again, please note, PE ratio is very fluid. It readjusts itself in accordance to the market condition. Okay, now, let us, as you can see here, we have the NNN, which is the National Retail Properties. Well, and at the time of the production of this video, the price is 47.26. It could change, but as at this time, 47.26. Now let's have a look at the other one. We have two as our case studies, which is AGNC Corporation, another rate. For now, it's $17.39. Well, as a new investor, you may be tempted to go for AGNC because why? You want to assume it's cheap and want to assume it's best value, mostly because it's cheap than NNN. But wait, here's the key. A low share or stock price does not mean the stock price is cheap. Now, bear with me. Let me explain. Let's look at NNPE ratio and do some little maths here. Let's come here. Okay, let's pick this tool. All right, now let's do this. NN, right? NNN, which is the National Retail Properties. What's the price now? As at today, as at now, 47.26 divided by the EPS, which is 1.112, 1.22 rather, will give us 38.73. Yep. Okay. What does this mean? Well, it means the stock is trading at 38 times its earning per share, and you are willing to pay such amount as an investor if and when you buy these shares. And then let us look at AGNC. Yeah, let's look at AGNC. Now, let's quickly do same thing here. Now, what do we have here? AGNC. Presently, it's trading at the stock price is $17.39. Let's divide that by this is very interesting. Look at the earning per share. Minus. Look at that. 0.69. What does it give us? Well, it gives us minus 25. And what does it mean? Well, it means the stock is trading at minus 25 times its earning. And if you buy this stock, you are paying minus 25 times. Okay. So you will agree with me that NNN with this one, National Retail Properties, yeah, you have value for your money based on this simple metric called PE ratio. Great. So in simple terms rather, the lower the PE, the less you are paying in relation to the earnings. However, this is key. You should be aware that some stocks may have a lower PE ratio because they have limited growth potentials. Again, at the same time, you should know that a high PE ratio does not mean bad or expensive. It could mean that the company is doing so well in terms of its product and services. For instance, Apple PE ratio. I checked earlier on. Apple PE ratio. Let's have a look. Apple PE ratio. The price, before we calculate the PE, let's get the price. Apple is selling for 131 for now. 94. So divide that by the earning per share, which is 3.69. That gives us 35.75. Wow. So, well, presently this price is 37.75. That's a PE. Okay. You could say it is high. Why did I say so? Because 15 is usually considered, anything above 15 is usually considered very high. But as you and I know, people are willing to buy the phone, Apple phone, and even invest in the stocks of Apple. Even at this price, 35.75, PE ratio of this 35.75. What does it mean? It means that 7.5 times is earning per share. Why? Because users and investors' confidence in Apple. And as such, they will not be bothered about the price at all. I can assure you that that's what's been going on. Okay, this is very key. Note this. EPE comes in two main varieties. I'm just going to choose two. There are 4 or 5 of them, but I want to specify on these two. Say these two. The first is the metric listed in the fundamental section of the most finance site. Yeah. Okay. Let's go there and have a look. All right. Which is with the notation PETTM. Okay. Where the TTM is a Wall Street acronym for trailing 12 months. These numbers signal the company performance over the past 12 months. Well, the second type of EPS is often referred to as forward PE. This is the company best educated guess of what it expects to earn in the future, say the year 2021, for example. Okay. You see, you will agree with me that the trailing EPS contains reliable data, though. Nonetheless, they are both useful, though based on the needs at a point in time. Okay, here comes the best part. Our target is 500 subscribers. Now, for those who already subscribed, thank you. The goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.